What they won't be able to do is what Seven West is doing, raising $440 million from the equity market. You had another scoop, a huge week for Nabila Ahmed.
Thanks, Owen.
And so you broke that story. Seven West capital raising.
That was a team effort, actually.
A team effort. Very good. Just like this program. The $1.32, 18% discount to the close before the raising, but actually it's 75% discount to where they started life as Seven West when they merged with WA Newspapers. So how important was is that capital raising to Seven?
Oh, it's hugely important. Again, a massive load of debt they took on when they did that deal, and investors start to get worried about that. And I think their leverage ratio was the highest out of any of the media companies, so it was a worrying sign. But for investors, I mean, they've lost so much money in this, but they didn't really have any choice because they could have only lost more money if they elected to stay out of it.
Steve, are they throwing good money after bad?
No, I don't think so. The market's concern about Seven has not been its operations. It's held up quite well. Its earnings are about 5% a little bit less than the market had been anticipating. So they're actually trading okay. But they had this big load of debt at 1.85 bill, I think, Dean.
Yep.
And the market's focused on that, and that's why the share price cracked. They've now fixed that. They're taking insurance against further deterioration, which I think the whole industry is worried about. It's not just them. Nine's a separate case because they've got this private equity structure. But Ten's raised money, not just through asset sale today, but the $200 million of equity they raised for the same reason. Everyone wants balance sheet insurance because they're all scared. They're petrified what's coming.
But why is Seven West still continuing to pay a dividend if they're out there raising money? So the second half of the year they're paying a dividend which is roughly equivalent to profit, and they've committed for the first 6 months of next year to pay, well, they've said they'll maintain a dividend at a 50% profit ratio. If they really need the money and they're so worried about debt, why are they still committing to paying a dividend?
Well, they would say they don't actually need the money. It's the market that's concerned about the money because they've said, and they won't tell us what the covenants were, they've said they're well inside their covenants, and so there was no immediate risk. But the market was paranoid about it, so they've solved that. And they've got a new CEO, and they tend to fix these things straight away.